ever felt overwhelmed by the sheer weight of your student loan debt? Welcome to the world of student loans, a labyrinth of numbers, terms, and conditions that can sometimes feel more complicated than the degree you're pursuing. It's a common experience, one that unites millions of students across the globe. The burden of student loan debt is like a heavy backpack that you carry with you long after graduation. It's a constant reminder of the cost of education, a cost that seems to grow with each passing year. But here's the thing, it's not just a burden. It's an investment in your future, a commitment to your dreams. Navigating this world can be tough, but it's not impossible. It requires patience, understanding, and a solid plan. A plan that outlines clear, actionable steps towards a debt-free future. If so, you're not alone. And that's why we've crafted this guide to help you navigate your student loan debt with ease. First things first, do you know exactly what you owe and to whom? Understanding the specifics of your student loans is not just crucial, it's foundational. It's like knowing the rules before playing a game. You wouldn't jump into a chess match without knowing how each piece moves, would you? So, let's make sure we've got a clear view of the game board. When we talk about the specifics of your loans, we're referring to three key elements: the loan servicer, the interest rate, and the repayment terms. Let's break these down. Your loan servicer is the company that manages your loan. They're the folks you'll be dealing with when you make payments or have questions about your loan. It's important to know who they are and how to contact them. You can find this information on your loan agreement or by logging into your account on the Federal Student Aid website if you have federal loans. Next up is the interest rate. This is the percentage of the loan amount that you'll be charged as interest over time. It's like the cost of borrowing money. Your interest rate can be fixed or variable, meaning it can stay the same or change over time, respectively. The higher the rate, the more you'll pay over the life of the loan. Knowing your rate helps you understand how much your loan is really costing you. Last but not least, we have the repayment terms. This encompasses how long you have to repay the loan and what your monthly payment will be. It's essential to know these terms because they directly impact your budget. Most federal loans have a standard repayment term of 10 years, but private loans can vary. Gathering all this information may seem daunting, but it's a vital step in managing your student loans effectively. If you're not sure where to start, a good place is the National Student Loan Data System for federal loans or your loan servicer's website for private loans. Knowing exactly what you're dealing with is the first step to conquering your student loan debt. So let's get to it. Now that you know your loans, what's the best way to pay them back? This is a question that plagues every student loan borrower. But don't worry, we're here to help you navigate through the myriad of repayment options available to you. First off, there's the standard repayment plan. This is the basic repayment plan for most federal loans where you make fixed monthly payments for up to 10 years. The benefit of this plan is that you'll pay off your loan faster compared to other plans and pay less interest over time. However, the downside is that your monthly payments may be higher than under other plans. Next, we have the graduated repayment plan. Under this plan, your payments start off lower and increase every 2 years. This could be a great option if you're expecting your income to increase steadily over time. Yet the drawback is that you'll end up paying more interest over the life of the loan compared to the standard plan. Then there's the income-based repayment plan. This plan sets your monthly payment at a percentage of your discretionary income and recalculates it each year based on changes in your income and family size. The upside here is that your payments can be significantly lower, especially if you're in a low-income situation. But on the flip side, you may end up paying more interest over time, and you might have to pay income tax on any amount that's forgiven after 25 years. Remember, each of these plans has its own set of eligibility requirements, so make sure to check those out. Also, keep in mind that private loans may not offer all these options, so you'll need to speak with your lender to discuss what's available. Choosing the right repayment plan isn't just about finding the lowest monthly payment. It's about finding a plan that fits your financial situation and goals. So take your time, do your research, and don't be afraid to ask for help if you need it. Choosing the right repayment plan can make a huge difference in your financial future. So think carefully, plan wisely, and remember, you're not alone in this journey. Did you know there are ways to get part or all of your student loans forgiven? Yes, you heard that right. Loan forgiveness and assistance programs exist, and they can be a game changer for many individuals grappling with student loan debt. Let's start with loan forgiveness programs. One of the most well-known is the Public Service Loan Forgiveness Program. If you work in a qualifying public service job and have made 120 payments on your direct loans, you might be eligible to have the remainder of your loans forgiven. This means, after 10 years of service and payments, the balance of your loans could be entirely erased. Another program to consider is the Teacher Loan Forgiveness Program. This is specifically designed for teachers who have been employed full-time in a low-income school or educational service agency for 5 consecutive years. Eligible teachers could have up to $17,500 of their debt forgiven. There's also a world of assistance programs out there. Many employers, for instance, are starting to offer student loan repayment assistance as part of their benefits package. Some might contribute a certain amount per year towards your loans, while others might match your payments up to a certain percentage. It's worth having that conversation with your employer or potential employer to see what's available. Additionally, there are a multitude of service-based programs that offer loan repayment assistance in exchange for a commitment to work in a high-need area. This could be a rural health clinic, a low-income school, or even a stint with the Peace Corps. It's important to note that these programs often have very specific eligibility requirements and application processes. So do your homework and make sure you understand the fine print. You don't want to miss out on a potential opportunity to reduce your debt because of a technicality. These programs can be a lifeline for those struggling with significant student loan debt, so don't shy away from exploring them fully. They could be the helping hand you need to navigate the choppy waters of student loan debt with a little more ease. What if you want to get rid of your student loans as soon as possible? Now there's a question that's probably been on your mind more than once. It's a daunting task, but with the right strategies, it's completely achievable. First off, consider making more than just the minimum payment each month. This might seem tough, especially if you're on a tight budget, but even an extra $20 or $30 a month can make a significant difference over time. The reason behind it is simple. The more you pay now, the less you'll pay in interest over the lifetime of your loan. It's like giving your future self a gift. Another strategy is refinancing your student loans for a lower interest rate. This means you'll need to apply for a new loan that pays off your existing student loans. Then you repay this new loan at a lower interest rate. It sounds complicated, but it's a strategy that has helped many people save thousands of dollars in interest. However, be aware that this strategy isn't for everyone. It's best to consult with a financial advisor before taking this step. Lastly, consider applying any extra money you come across, such as tax refunds or bonuses, towards your student loan. It's tempting to use that extra cash for a vacation or a new gadget, but remember, every dollar you put towards your student loan is a dollar less that you'll need to pay back with interest. It's a smart financial move that will pay off in the long run. Remember, these are just strategies. They may not all apply to you, and that's okay. The key is to find what works for you and stick to it. It's a marathon, not a sprint. But with the right mindset and a bit of discipline, you can make significant progress. With a bit of strategy and discipline, you can free yourself from student loan debt sooner than you think. So take a deep breath, put on your running shoes, and take that first step towards financial freedom. So, what have we learned about navigating student loan debt? Well, we've taken a deep dive into understanding the intricacies of your student loans. We've discovered it's not just about knowing what you owe, but also about understanding the terms and conditions of your loan agreement. Next, we've explored the variety of repayment options available. From income-driven repayment plans to refinancing, we've seen that there are several ways to make the repayment process more manageable. We've also uncovered the world of loan forgiveness and assistance programs. These can provide significant relief and help reduce the overall burden of your student loans. Finally, we've shared some powerful strategies for paying off your loans faster. From making extra payments to applying windfalls towards your debt, these strategies can help you become debt-free sooner. Remember, while student loan debt can be daunting, it's not insurmountable. With the right tools and strategies, you can navigate your debt and come out on top.